Hey guys, Keel Stokes here. Welcome back to another episode of the Trading Edge video. If you guys are brand new, thanks for joining. Hope you enjoy the channel. We're gonna get right into it and kind of be short and sweet today, mainly because, so let's hop in. We're gonna start on the pound dollar, and I actually have to tell you about a mistake I made on this pair, but I'm gonna do the analysis first and then talk to you about it later. So if we go down to the 4-hour time frame, we give ourselves some real estate, stretch out our chart here, you're going to see that we actually have an at market cipher pattern, right? A cipher pattern is going to be one of our advanced pattern formations. It forms a little bit differently than your traditional W and M shaped patterns like your Gartleys and your bats and your butterflies, but it's a very frequent and a very good pattern regardless. It's going to look something like this. Starting off, we're going to have our swing high to swing low, our swing low to swing high. Told you it's been a long weekend. That's going to be our X to A. Our first retracement is going to be our A to B. Then we get an extension, which ends up being our B to C. And then a move back down to our 786 is going to be our C to D, with the zone going from our 786 all the way to the low of our X. You can see that we're actually trading really low in our zone, which means you're gonna get a better entry, right? The actual entry where I'm involved is right here. Assuming this stays here at market, you're gonna get in a little bit lower. So a much better entry with our stops below the X leg. Now, the mistake that I made on this pair is during the week, I think it was Friday, I went on the Tier 1 trading chat and I said, hey guys, I'm involved in the cipher, but I'm going to play this one a little bit differently. I'm going to look at this as a kind of a half traditional, half trend continuation, meaning I was going to take half profits off at my normal target 1 and then leave a remaining position on for an extension. Because the bigger play that we were looking at in the pound dollar prior to the cipher forming was a trend continuation trade. And I'll show you what I mean. If you guys are new, typically we do this backwards. We start with the daily time frame. Do our I and our P, our identification, our prediction, look at the lay of the land, and then we go down to the lower time frame. But because I wanted to explain the cipher first, we're doing things a little bit backwards. But you can see that our most recent move here was a break and close above our previous level of structure, right? This is our most recent structure high. We broke and closed above it. That allows us to make the prediction that price is likely to go higher up into this zone right here. So originally we're looking at this as a pullback trade and a chance, if I get enough real estate on here, there we go, a chance to buy it up in anticipation that we were going to continue up to this level. And the cipher pattern offered a convenient and a very aggressive entry into doing so. The problem was, and this is what I didn't see at first, is we actually have what I consider to be a false breakout, right? We have the candle right here that breaks and closes above that level, but then on the very next day, we engulfed it, meaning we had a candle that broke directly and immediately broke and closed below, which negates the breakout for me. Because it negates the breakout, it negates the higher high, higher close. Because it negates the higher high, higher close, it negates the prediction that we're likely to continue higher. So the cipher is still valid, but I'm just going to take the traditional targets here. Now, the only reason I caught this, and we talk about this a lot, we've been mentioning it recently with the Trading Coach podcast as well. By the way, thank you guys for helping me reach 1,000 episodes. Crazy, right? I appreciate the love and the support. Cheers to 1,000 more. But we always talk about journaling and review, right? The process of becoming better, or at least staying sharp in the market, not going backwards, is journaling and reviewing. So as I reviewed this trade and went through the process and got ready to kind of grade myself on like, hey, 100% good trade, I noticed this where I didn't notice it before because my mind was so set from the week on the trend continuation. So this is why we do those reviews. This is why we do these journals. In this case, it helped me from kind of taking a profit target that I shouldn't be taking. So I wanted to give that because I thought it was a good example of, one, coaches and teachers being normal. I'm a normal trader just like you, but two, the power of that review and that journaling process. All right, next pair. Our next pair is going to be the Aussie dollar. Just kind of go back in the throwback machine. Remember that we were looking for a violation of this consolidation pattern here on the Aussie dollar. We broke. We're now retesting that. Our anticipation was that we were going to continue higher. and we're coming down to a decent spot. Now I say a decent spot because it's not the best spot in the world, but what we're noticing here, right, there's not a lot of structure, recent structure looking left. This is going to be the issue here, right? Our structure zone is actually going to be a little bit lower down there. But what we're doing is we're starting to put in a deceleration pattern, right? We have a sharp kind of breakout below this structure level right here. If I get my lines working. And then you can see we're ended the week kind of just churning and bending. So you look at these things as falling wedges. You look at these things as falling channels. These are what we call deceleration or relief patterns, where we would expect that the market gives some sort of relief and moves back up. Now, there hasn't been any other clues up to this point. There's no divergence. There's no higher high, higher close. So there's nothing really here saying that this is the point where you should want to buy the trade, but it is something that you want to pay attention to, either for a clue at this level as we start to hit kind of a high volume zone right here, or see if we can drift a little bit lower. This would be ideal if we can continue drifting a little bit lower. I'm getting all my tools messed up, sorry, long weekend. If we continue to drift a little bit lower and maintain kind of this pattern down here, start getting some RSI divergence where our RSI keeps or starts doing something like this as we continue to go down, that would be a very positive sign for a buy. So not a buy or anything right now, but certainly something to keep an eye on as the week continues. We've got a busy week, by the way, as news. I didn't talk about news. I meant to do that in the beginning, but just to mention, and I'll probably bring some graphics up for you. I think Wednesday, Thursday, Friday, all high impact news event days. We have Bank of Canada rate statement on Wednesday, I believe. Then what, PMIs on Thursday? Let me just go and show you guys this real quick. Let's see, Wednesday. Yep, so Wednesday's PMIs, euro, pound, dollar, all on Wednesday. Bank of Canada interest rate cut, expected cut as well on Wednesday. Thursday, we've got GDP for the dollar coming out, ECB president speaking as well. And then Friday, we wrap things up with core PCE. I think we have another FOMC member speaking at some point as well. Or was it just the G20 meetings? Oh yeah, we have some FOM members speaking a little bit later in the day as well. So be on the lookout for a busy week news-wise as well. All right, let's move on to the next one. Dollar Swiss was a pair that we were watching for the last few weeks. This was interesting, right? We had this little consolidation period here, and as we came down to it, what did I say? I said the market likes to repeat itself. Watch out for the same exact move. And we didn't get the same exact move here, but we got a very beautiful double bottom equipped. Everything we need. Nice long-legged candles, nice rejections right at that level. So maybe not the exact same move, but a very, very close one. By the way, guys, we got an elephant candle right here. Told you pay attention to those zones. Now, why are we talking about dollar Swiss? Well, because I still think there is meat left on the bone, right? We are looking for a pullback back into, not the elephant here, I got a sticky mouse, but back into our previous level of structure, which from a big perspective looks like this, right? I'm taking the low, these little wicks right here, and I'm taking the high. This is our bigger zone. And I always start with kind of a bigger zone, right? The outside of the picture, and then getting more detail. And you see I have my stuff up here already. I'll erase it and just draw it in fresh, but there's a few things we can do here. We can take a Fibonacci retracement from our ultimate swing high to our swing low right there. We can take a Fibonacci retracement from our last move, swing high to swing low right there, see what lines up, right? You can see 50% right in the middle. We have a 618 right here, a 618 a little bit lower, and then we can bring some volume on too, right? So we take our volume profile from our high to our low, and we can ask ourselves, where does the volume start to pick up? And you can see it picks up right around that 50% retracement. So that's a good level to look for targets. And then lastly, I'm not sure if I said lastly already, but if not, second to lastly, I drew it in a little bit earlier. We have another elephant candle right here, that red one, and you guys know my style. I like to take the zone prior to that elephant candle and look for targets there. So there is still room to go higher here. The question is, what do we need? Well, We're going to go one more time frame lower and take a look at this, because this is going to be a little bit of consolidation, right? So let's go down to the hourly. You can see this consolidation right here where the market's having a think. We did clear these highs on this side, so that's a positive. What I would need to see is this. I would need to see what I call a fresh break. So price action breaking and closing above this level, and then looking for that next, and I'm a pullback trader, so this is my style, looking for that next pullback and then a chance to trade it on the next wave up. So there's still meat on the bone opportunity here with the dollar Swiss to go higher up to, what are we looking at here, about 89.35s. So keep an eye on this throughout the week as well. Now it's time for what seems like our weekly recap of gold. I did a few midweek videos on gold talking about targets and entry techniques. And you'll remember, if you haven't seen those videos, we broke above, close above, bullish bias, bullish continuation. We are getting a little bit of we have a little safe havenish end to the week with what's going on in the world. So we're seeing some strength in the dollar. But from a technical perspective, we still predict gold to be going higher now that we got that break and closed above. Now, in the midweek video, we spoke about this level right here, right? We had the elephant candle right here. We had the rising wedge right there. I said, this is the first place that I would expect price action to hold. And this is where you can look for a trend continuation buying opportunity. And you're saying to yourself, Akil, we blew right through. And the answer is yes. And again, this is the difference, I think, between a lot of traders that use these videos, or in general use other people's videos as signals and don't look at the actual trading process. The trader that's looking at this as a signal is saying, okay, Akil said this, or whatever guy out there is saying this is a good level to buy. So what are they doing? They're putting their order on and they're buying right at this level. However, right, what do we always say? We want to be predictive with our analysis, reactive with our execution. So what we're doing is we're not just looking for price to get to a certain level, unless you're really aggressive. We're looking for price to get to a certain level. Then we're looking for our specific reason for entry at that level. And I want you to ask yourself this question. Was there ever any reason for entry? Was there ever any sign that the market showed you at this level that said price is likely to reverse? And the answer is no. We just saw red candle after red candle after red candle. So unless you're a very aggressive trader, and that's okay, but then there's a gift and a curse. You're going to be in every opportunity, every win, but you're also going to be in every loss. There's no reason you should have been in at this level. You need to look for clues. So the next level that we're dropping down to now, same thing, right? We're down to a previous level of structure, right? If we draw out our ebbs and flows, we can see ebbs and flows right here down to our previous outside return. And we have red candles, and we ended the week with an inside bar with a long wick to the downside. Now, again, we saw that same long wick to the downside higher. An example of an entry reason would be if we were to start the week with a higher high, higher close. That's a positive sign for the bulls. That would be a positive sign for getting involved at this level. That's still an aggressive one, but a positive one. A more conservative would be waiting for something like that and then waiting for the retest, right? Like we saw with dollar Swiss and the double bottom down here. See how we came down here, higher high, higher closed, and came back down? That's a more conservative reason. So what we're saying is with gold, wait, and with any trade, but just using gold as an example, have your predictive levels, ID those predictive levels, wait until price action gets to those predictive levels, and then wait for your specific reason for entry, wait for the market to give you a clue that what you predict will happen is more likely to happen than not. It'll save you a lot of money, I promise you. Lastly, and this is going to be kind of a blanket case, you can pick and choose whether you want to look at the NASDAQ, whether you want to look at the S&P, whether you want to look at the Dow. We're all doing very similar things. We've got nice pullbacks. The NASDAQ and the S&P are kind of similar, so we'll just pick and choose one. But you can see that we've had new structure highs right up here, and now we're pulling back into previous outside return. So just like we spoke about with gold, these are good levels to look for clues of where to get involved. Again, the S&P is pretty much the same thing. The levels are going to be a little bit deep, a little bit wider. We're not as deep into it, but same type of concept. We are in that kill zone, the area between our most recent new structure high or our previous new structure high and our outside return. Sorry, I got kids running around in the background. Just finished the tournament. We got friends over, and other friends came over, and the wife left me by myself. I had no idea it was all happening until they were in my car. So, dad life. The Dow is a little bit different, right? This is very a little bit more similar to the gold breakout. We're not at a recent structure level, but we are at the top of our previous structure high. So with the Dow, you want to be patient. This is the start of our zone. You probably want to start looking at this zone, start looking at things a little bit more serious at this zone. But if you're someone that's looking for kind of a quicker entry, this will be the level to start looking for signs of a continuation. In fact, now that we're talking indices, we can add the same thing to the Australian S&P, right? Same exact thing, very close to the Aussie dollar here. Broke out of our wedge pattern, our triangle pattern, and we're working our way right back into both our horizontal level of structure right here and our trend line too. Lastly, I promise, I think I've said last like a million times here, but I'm all distracted. I don't know what's going on. Real quick, just to touch on Bitcoin, another advanced pattern formation, so kind of bringing things back to our first trade on pound dollar. X to A to B, B to C, C to D. We are hovering right below that zone, starting at 68K. Once we get into that zone, we're going to have a valid Cypher pattern. And again, to start, if you're trading it aggressively, this is where your sell limit goes, right at this level, looking for a short. Or if you're more conservative, if price enters that zone, then you're looking for your reason for entry, whatever that may be. Now, before you guys go, two things. If you're looking for more content, one, check out the short section here on the YouTube channel. Lots of daily quick trading tip videos made specifically for you. Also, make sure you check out the Trading Coach podcast, 3 new episodes each week. We got some very interesting topics that we're talking about, diving a little bit into looking at yourself and your childhood and why you're making the mistakes that you're making, but certainly relating that to trading and investing as well. So you can listen to that on your favorite podcasting app too. Right, until next time, plan your trade your plan. Good luck in the markets this week, and I'll see you guys next time I put out some content.
I want to be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain. I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague. We all love to hate, have to play the game, have to make a name. All our insecurities are on display.